following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on the 25th day of April. My pleasure to be here. A huge move in the Dow again, up 233 points at 20,997. S&P is up 13 at 2387. You've got the comp index. Let me just move this away here. You've got the comp index up 33 at 6,017. The VIX has slumped down to the 10.67 area. It was a 25-30% move on the downside. Very unusual to have that kind of speed. The short-term trading index is at 1.21. It seems to not know that the market is up so huge. The E-mini is up 13 at 23,393. Let me just show you something here. I think you might find this quite interesting. ESM17. So the 120-minute chart right now has made this, what I showed for my subscribers, a bowl formation. It looked almost like a teapot with a little handle, or it could have looked like Aladdin's magic lamp as it broke out to the upside at the beginning of the session. What's really important about this is that essentially what it's done is it's built a huge base in the 2352 to the 2335 area. So that's important to keep in mind. Another aspect that is very important is we can just move this 2-minute chart. Oh, let me just show this. I always forget to do this in the first segment. 2-minute chart went to a peak E at round number 2,387 in the E-mini June contract. Pulls back to a trough D. I drew in the semicircle arch formation a little while ago. To show that there was a chance that the MACD was turning around, stochastic was turning up, and there could really be a bit of a bounce right here. What's really important about the very short term, let me just move this away, is that the 10-minute chart made a peak D and went under the 9-period exponential moving average. The MACD is starting to slide a little bit. So I'm going to go into everything in a moment, but let me just do this because the E-mini is giving you so much information. Within the context of where we are in the weekly chart of the E-mini, there is a pattern that has a Chapman wave falling X formation. And if you break above it, there's a good chance you can go to the next left side peak. In this case, it's the high of 2388.75 made the week of the 17th of March. But then all of a sudden, what you've got is the all-time high of 2397.25. So this is very positive action. It means that within this formation, I always talk about the fighting formation. One is the pattern that says there's a cup forming. And if you were to break out from this resistance line, there's a good chance you're going to head towards the high on the left side. The other is that if you form an arch formation and fail, be prepared to come and retest the low on the left side. The MACD is still not very good, and the stochastic has turned up, but it's still at 68%. On the one hand, that's very bullish because it says, wow, if the stochastic can now go to 83 or 84%, look how much you've gone on the upside. And if the MACD can cross positive, look how much you can go to the upside. However, if there's a failure from here, you have to be very careful. So I want to just put that into the puzzle. Let me move this a little bit now, and I want to show you something else. Within the Dow itself, I'll do this as I'm doing the numbers because I think it's very important that we get the numbers because we're waiting now for the Russell 2000 to get to a leg D. So let's see how we're doing here. Within the context of the markets, the Dow is still technically within the sell mode because it's under the previous high. But because the MACD crossed positive, and because there's another gap up, huge, I mean, we're really talking about like a rocket ship to the upside. The stochastic's been dragged up. It doesn't seem to be doing it willingly, but it's at 48%. And considering just the other day it was at about 22%, that is good. What I'm really looking at is that same pattern, that rectangle formation that we've been talking about for so long in the weeklies. Now, if I can just do this for a moment, you'll see exactly what I'm talking about. You see that where it says technicals, 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 in each one of those you had the stochastic pulling back quite sharply, the MACD pulling back towards the 9-period differential, green one, green moving average going to the red, longer term 26-period moving average in each one of these cases. And very often it broke to the downside. Well, I cannot ignore the break to the upside because it's happened at other times. When you've got this huge green candle, you have to respect it, but you respect it more when you take out the previous left side high. So 21,169, the high of the week of the 3rd of March. That was the 1st of March speech high right there. Now, if we take out, if the Dow takes out 21,169 in April, not only does it extend this move to the upside, but it extends the leg D in the monthly chart. And now I can quickly go to the SPX, the S&P. So it's the speed with which this is unfolded that is so important. And what's really important about this is that within the context of the market itself, markets tend to like to close to let me just move this higher, tend to love climbing a wall of worry. And there certainly is a wall of worry. So at this particular point, we have to consider that the S&P could be in leg D/B in the daily chart at 2,499. You start a leg E/C in the weekly chart, and you extend leg C in the monthly chart. That's why the next couple of days is going to be really important. We've got potential for tomorrow. I said to subscribers to my opening call, we've got a whole bunch of stuff coming tomorrow. We've got taxes. We've got the budget, the budget, funding the budget. We've got just a whole bunch of things. So what happens today towards the close is going to be very important. Does it hold at the highs? Is it going to be a close in the 2380s for the S&P? Or is it going to tackle the 2390s to try to get close to the 2400 level? Or will there suddenly be some sell-off to say, whoops, we better be a little careful here? So we'll talk about that in the context of the markets because the QQQs have skyrocketed up here. And congrats to Steve Rose for giving a great call on the Qs, the NASDAQ 100. And not only that, he's got a webinar tomorrow night. Everyone who's ever had anything to do with TFNN, you go to the front page and you'll see that you can come in and listen to this half-hour, 5:30 to 6 o'clock webinar. It's right there, ready for you to enter. So this is G/C in the daily chart with the technicals just turning possible. The stochastic hasn't gone to 80%. It's at 76%. That is good. But look at the strong leg F to the upside in the, and it's extended this way, 5 to the right, and we've extended leg C. So the QQQs are really on fire. We'll look at the SMHs because if they are, they're actually quite well. They've gone to a new all-time high at 18.31, up 56. Gold at this particular point, GC was down. It's down again, down 8. I think we'll take our time. We'll look at the other indices when we get back. There's no need to rush. The Dow's up 233. S&P's only up 14. There's a divergence between the two. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I just had a question about the S&P daily right now. The daily right now is in D because it didn't take out the 23.22 low of March. It went to A, B, C, and then pull back sharply. Within it, it's got an A, B, and there would have been an overlapping wave, except this has to take the highest letter, and it's a D. I put a D/C just to make it clear exactly what we're looking at. So, and then the weekly is in gray B. In other words, it's gray B until it surpasses 2,489. Did we say 98? And if it does that, then immediately it goes E/whatever the letter is. Okay. Now, let's have a look at the IWM. So the IWM is the missing link here. IWM is within, say, 140.88. It made it by 2 cents. So now we have all the little duckies in order. So this is now D in the weekly chart. We were waiting for that, and I couldn't believe it didn't happen. But when I went through, I showed over the weekend, I showed subscribers that there was a chance that the IWM could climb a little higher. And that's what we're doing. But what's most important about this AB, this could be even a C in the daily. Yeah, this is actually a C. Let me explain what I'm looking at. We have quite a number of Chapman waivers in the den who are looking at the charts. Look, that from the low of 132.40 in March, it went to 138.17 peak A, pulls back. Under it, it had another A, and you've got to take, this is the key low, not that, but this is the key low. So that's A right there. And that's that peak at on the 11th of April at 136.92, pulls back, makes a peak a few days ago on the 20th at 137.67, because the next day is 137.55. So that becomes a gray B. And this becomes a gray C right here, and it's a new all-time high. So this is actually a blue C. I'm not calling it a G/C. I'm giving it the title of blue. There you are. So IWM should go a little higher. And the weekly high is just nominal at this particular point, but it is a high. It's made the cup formation, the second cup formation. There's actually a pattern that I look at that shows this cup formation, pulls back, makes a lower low. Therefore, it can make a higher high. And then you've got to be very careful that it's not going to pull back after that gap to the push to the upside. Then 140.86 becomes an area that inside there it wants to test at some point, fairly soon, actually. That's the pattern that we usually look at. So now we're looking at gold, and what I had said was gold had pulled back. It made a peak G/C, but what I had said to subscribers that I'm pretty sure that that was a peak. Oh, look at that, peak E, and then was the beak. Remember, we were looking at this in the GDX. What a plunge. GDX is down $1.08, minus 4.61 at 22.13. That was a peak E top. Oh, how these work so nicely sometimes. What we're looking at, and two things are happening, is that the arch, lowercase h, is going to a lowercase m in the weekly chart. This is not a good sign, but it does say something, because let me show you what's very interesting. The dollar, now, if you said to me, gold is down $8 to $10. Again, it's down, and the GDX, the gold miners, are down really sharply. Where is the dollar? Well, the first thing I would have said is dollar must be up and euro must be down. No. Wait a minute. The euro is screaming in leg C to the upside. This is a blue C, so this becomes an up arrow. And it's in a leg C in the weekly chart. This is so interesting. Now, one of the things that we have discussed is in my CD introducing the Chapman wave methodology, I talk about the arch formation, the lowercase h that goes to a lowercase m. At some point, if it on the M side, in other words, the second arch, if it takes out the left side low, starts to close above it, there could be a move that's a much bigger arch formation. And this might be happening now in the euro. So if that's the case, let's just for fun look at the EWQ, which is the French. Oh my goodness, this is the French in leg B, gap, two huge gaps to the upside, and leg D in the oh, look at this. I mean, are the French saying that they've now Frexit or whatever it is that they want to call themselves? This is a hugely positive monthly chart. So all I can say is that the European markets are responding extremely well. When I say extremely well, that's actually that's not an exaggeration. It's extremely well. And the week is young, but so far that is a great candle. Why? Because it took out that resistance. It took out all the resistance on the left side, and it took out the high of May of 2015 at 27.90. This is the iShares France ETF. Now it doesn't trade the same as, it doesn't have the same pattern as the French CAC Courant. It's different, as I understand it. I'm going to take a little time the next week or so, try to get those indexes that I used to always look at for decades, and I just haven't had on TradeStation for some reason. And I don't know, I keep calling, and maybe they just haven't given me the right symbols, and I really didn't want it. I've been quite happy having just the American market to look at. Anyway, so that's the story. Now, what's really important about this big move at this particular time is that within the context of the poor action in the copper market, even now it's come off the 200-period moving average in the daily. It's not looking great. What about wood? WOOD. There's something about tariffs. Oh my, look at wood. 59.78 up 57. So much for a tariff. Seems to be helping. It's in leg E in the daily, E in the weekly, and C in the monthly. That's the iShares Global Forestry and Timber ETF. And let me just quickly check here. I don't want to miss out on anyone calling in. Did I just make a mistake? Shouldn't have done that. Let's go back. Out, damn spot. Okay, there we go. Now, what's really important about this particular move, here we are. Look at the VIX index, VIX. I'm going to get to the rates in a moment. But look at this. The VIX is down at 10.60. The most important lows have been 10.28 back in July of 2014, 11.05, let's see, all the way back. But the most important one was 9.39 back in December of 2006. And then it went peak A, peak B, peak C, peak D to the October 2008, 89.53 level, the bank crisis. I don't know when we're going to see that again. We will one day, but not for a day or two. No, not for a long time. So meantime, back at the ranch, we're looking at the VIX index suggesting that there's buying intensity. I'm not going to fight this. Buying intensity says that on the short side, you've got to be very selective. We've tried to be selective today with one short, but mostly we're looking at the long side. And well, let me go through something else at this particular point. If money starts to flow out of bonds, the TLT is down 72 at 122.21. Now it has the pattern of the Chapman wave stalk leg formation. Here's the leg. Leg, body, neck, head, and I'll color these in when we get back. And here's the beak, and the beak is gone into the body itself. That suggests it could go even a little bit lower. So I'll be back. We'll talk about yields as soon as I get back. Basil Chapman, Tiger Technicians out. Dow's up 240. S&P's lagging. It's up 40.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back. So here's your 2-minute chart. Remember, we did this. I said peak D, I drew an arch, went a little higher. Now it's coming back to retest. I would not be surprised if we've kind of seen the high for the day and that we're just going to meander for a while, because we have to wait for tomorrow. I think there could be some nervousness about tomorrow's news. So the TLT is pulling back, and it's got the arch formation that's gone to an M formation. So yields are just stuck in that low range, and we'll see what happens if maybe just for a moment I'll quickly go to the, let me see, any. Oops, there we go. Oh, we got a caller right now. We have Scott in Safety Harbor. Scott, how are you?
Fantastic. I am moving slightly over to X now, is back on my favorite list.
Good.
And very excited about it, and like to hear your take on both of those, CX and X.
Okay, so let's do CX first. First of all, CX, I'm going to do FCX. Didn't they have earnings out this morning or sometime? So FCX popped up. It's at 12.85. It's up 62 cents. Hasn't quite held the gain. The weekly chart still looks kind of poor, and the daily chart looks like this is going to be a big test because it has to get to 13.55. I would say within... Today's Tuesday. Oh, yeah, by Thursday at the latest. Because if it pulls back a little further, it's just going to say, you know what, maybe it hasn't got all that much upside. Maybe it also doesn't have all that much downside, but it's just not participating. So let's go to your CX, which CX is, this is a CMAX. This is the Mexican cement company. Nice move today, up 10 cents at 9.07. So we were talking about how it could hold support, and in fact, it went a little bit lower, but it had. Then all of a sudden, it had a couple of days with parallel lows of 8.65 and 8.65 on the 19th and the 20th of April. So now it's gapped. Yesterday it gapped up, and today it's held the gap. It went a tad under the low of yesterday, but much higher. It's almost like an engulfing candle after doji. So this to me is positive. Now the big question is CMAX trading at $9.07? Is it now on its way to make a V-shaped recovery to get into the 928s and then the 943s, and keep climbing and then go to a leg D in the weekly chart? That's the big question. And I'm going to venture to say that if it doesn't fill the gap within 2 days, in other words, if it doesn't go below $8.88 and the high of the 21st at $8.84, and if it doesn't do that in the next few days, instead, all it has to do is really get into the body, $9.12, the body of this ugly candle from the 12th of April, where it just smashed to the downside. And that would suggest that, yes, that's exactly what it wants to do. I'm going to grab the 120. Yep, the 120-minute chart is acting pretty well. So keep this on your radar. I'm going to suggest you just keep doing what you're going to do. However, this is the first time I'm going to say...
I'm at 17 times now in a row, 17 times where I've bought it under 9 and sold it after 9. I mean, it's just unbelievable.
That's fantastic. I'm going to make the one suggestion that I said I'm waiting to do. I'm going to suggest that at $9.08, if you can buy it one more time between 9.02 and 8.98, that position you might want to put in a position, not big, just a small position, and see if you can hold it for a few days. Why? Because from the way the MACD is trying to turn up and the stochastic's moving higher, if it's able to just dip slightly and then go back into the $9.10 area after doing that, I think you might have yourself a position that you could hold as you're busy trading in and out every day. So there's a position you don't even have to look at it again, because if you do get it around about that 902 level and it manages to push to 920, you could make a stop of $9.08 and just keep it there and then start to move it up as it gets maybe to the 943s. So here I am, I'm saying for the first time, the weekly chart suggests that if there is just one little pullback, or maybe you won't even get a chance to do it, but in this particular move, if CX pushes into the 9, it's at 9, the high today is $9.09. I would say 9.15 to 9.18. If it gets to $9.18 in this move, even preferably without making a peak in the next 2 days, just keeps going higher, I think the weekly chart is going to improve tremendously. So that's the one thing.
What's so odd about this, Basil, is it's actually going against the news. It's going against the bad peso. It's going against that they don't want any part of the wall. So it's going against the news and
everything.
Still powering up.
Yeah, this is the exact bad news scenario, climbing a wall of worry, a real wall of worry. Hey, I love that. We've got a new expression. This is the real wall of worry. So, and the other one and the other one you're looking at is X. You know, I spent a lot of time last night going through the steel stocks, and I'm saying to myself, if Alcoa gets a big move to the upside, will that impact the steel stocks positively or negatively? Well, Alcoa not only got a big move to the upside. There's also this whole thing about China possibly dumping, therefore they're going to put tariffs, etc., which is favorable. Yeah, I believe it's favorable to Alcoa. So I wanted to see, would there be some kind of residual? So instead of putting in a buy this morning for one of the steel stocks, I said, you know what, I'm just going to wait because I think I've missed the move on Alcoa. I actually wanted to buy Alcoa.
I used to be big into Alcoa. Alcoa used to be my CX,
that
my
was
ATM.
your go-to stock,
and I told you at the time when it changed, it was trading at the higher price now. I don't know out of 20 different guys that I day trade with, not one single one has got the number, let's say, on Alcoa. They can't figure it out, and none of them trade it anymore since it's a new price. It's interesting how that works.
I'm going to suggest that you put it on your radar. I think it's going to be more favorable than the steel stocks just at this particular point. So keep it on your radar, but at the same time,
I'm holding and the aircraft stuff coming out. I mean, I don't see how people cannot put Alcoa on the radar, back on the radar.
Yeah, I think it's back on for sure. It's on the radar. As I said, I would have put in a buy this morning, but I would only put it a fraction above yesterday's close, and therefore I would have missed the buy for my subscribers. 33.44 was the high yesterday. And it closed at 33.31. I probably would have said it's got to be under 33.45. Well, it gapped up. The low today was 34.23. So it's just taken off. There'll be time, and I think it's still early in the this particular cycle for Alcoa in the monthly because it's only in leg B. But of course, this is a stock that goes back decades and decades, but it had the spin-off in Alcoa right now.
And a special note to all the listeners from a guy who's been there: don't get all drunk with this market. Be careful because it can fall off the table tomorrow. At any point, you just need a little bit of bad news, and it'll stall. I don't know about falling off right at this moment, but it could certainly run like hyenas. They will run so fast, and you'll be left holding the bag.
So I'm just going to say to you, keep your eye on the steel stocks, but I don't think they're acting as well as I liked. They're making lower lows, and each rally just seems to fail right in a trend line, trend line. So I have to tell you that until United States Steel X, which is trading down 66 cents at 30.54, can really break and go into the 33.50s. I'd actually even like to see it for a change in the 34.35 area, because then I'm saying to myself, great, finally higher highs and higher lows. So keep it in mind.
I'm with you on that. I'm waiting to get back into X. Not for the lower price, but I'm with you. I'm at the 31.50. When it hits that, I'll feel more confident that the market's confident in it again.
Very good. Congratulations, Scott. Thank you for calling.
Thank you. Bye-bye.
Always good to hear from you. Okay, folks, let me just show you this chart. We're about to go to a break. I want to show you the 2-minute chart. See how it's testing.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
I've always had a question the day about ANW. I don't even know what it is. It's Aegean Marine Petro Network. So it's trading at 11.38, down 23 cents. Made a peak D in the daily. I just say be careful. It looks like it's got the. Funny look. It looks just like the look. See ABCD and pulls back, makes an arch formation. Look, ABCDE pulls back, makes an arch formation. So you just got to be careful. This is a pattern. This H pattern. You got to be careful because if it takes out the left side low of 11.20, that whole area of 11, actually the area all the way down to the 23rd of March, the low of 10.65 becomes viable. I just be careful right now. Looking out the monthly chart is okay, but I just say be careful. Now, a couple of questions we had. SPY. The SPY is trading at 238.43 in leg. I'm calling this leg C. That kind of corresponds with what we were looking at the IWM. And we've got the Chapman wave falling X formation right here, right there. And it's taken it out. That says you can go to the left side high of 239.44 and then 240.32. So the GT says SPY to hit or exceed 241 by 519. Big buyer today. A big buyer. 241. Yeah, I think that's a possibility. We might even get there. Maybe in April we extend leg C. That's very bullish looking out in the monthly chart. So I say, yeah, that's a possibility. The action right now suggests that it should try at least to get to 240.32. It's not all that much higher than where we are, but it's going to try to do that, okay? So yes, but the support that you got to watch is 237.40 to 236.80 over the next 3 days, if there is any pullback of consequence. Next question is, Bob wants to know about Caterpillar. Oh, man, let me tell you, this Caterpillar, up $6.40, 6.61% at 103.21 in leg D. Makes the low right there on the 27th of March at 90.34, and now it's 13 points higher. And it's in leg D in the weekly, leg D daily, leg D weekly. The MACD hasn't crossed positive yet, and the stochastic is rallying, but it wasn't all that great. So that gives it room to rally if it's going to continue higher, but you've got to be careful. A failure pattern would be deflecting low. So I'm just saying this gap at some point, 102 round number low, I think that'll be tested at some point, maybe sooner than we think. And it's leg C, very bullish in the monthly chart. So yeah, we're getting close to some kind of a digestive period, but this is spectacular action on price movement for Caterpillar. Next question was, let's see. Al said he just shorted the QQQ, the IWM, the diamonds at the open. Everyone has been trying to short for 3 weeks. It's time now at highs after everyone has been stopped out. You might be right, but you might have to put up with a little bit more flurries to the upside if the If the IWM is going to go to, if this is really leg C and it has to pull back, go to leg D. If the QQQ is in leg C and not G, but it has to still pull back and make one nominal new high, we could see in April that there is going to be a test. Question about the SMHs. There was that round number high of 80.00 yesterday. Previous all-time high was on the 30th of March at 80.05. And look what happened. We've taken it out. Good candle. MACD cross positive. Stochastic has gone from in the 10 or 11% area to 73 just in a week and a half. The weekly chart technicals are still poor, but this is, I'm calling it an F for now. There could have been a recycle, but I'm calling it an F for now in the weekly. It's extended the leg C in the monthly. I'd hold off looking at anything on the short side. That was the question in the den. Just hold off a little bit longer. And remember, I was told that someone shook his head at Applied Materials doing so fantastically. Although he says it's a great company and all, but their projections don't seem to match what they're looking at. Whereas LRCX, which is Lam Research, they got everything rolling, and they've got factories that they're opening up all over the show. They got backlogs that could take them another 2 years or something like that. They're really looking fantastic, and this is what they publicly talk about. So this is a leg D in the daily and a leg E in the weekly. Everything about it says Lam Research, I said it before, but I was wrong, at 130.13. That was peak C. I thought it was a G/C. Now it's in a leg D. That Lam Research is extended, but the weekly chart is not giving a signal now with this big move up in the last week that it's ready to turn down. It's going to have to be a bad news event that drags it down at this particular point. LRCX trading 144.53 up to. So, yeah, so I'll just be a little careful in that. Just use your usual stops. That's all. That's all I can say. So Goldman Sachs, so we missed a buy yesterday on one of the bank stocks we wanted, and we had Goldman Sachs. I wanted to buy call options on Goldman Sachs. It just moved too quickly. I didn't see anything that was actually reasonable for what I wanted to have for the newsletter. We haven't had options for ages, but this seemed like a perfect time. So if I'm looking, so Goldman Sachs is up 3 at 226, up $1.40. Bank of America is up 60 cents at up 2.52% in leg B. This is really good action, and this is kind of mimicking in what we're seeing in the other charts with that potential cup formation. So the next 3 days is going to be very important, because if the XLF trading at $23.91 starts to give back, the fact that it did the doji candle yesterday and then gapped over, it says that the open and close yesterday around about 23.69. If in the next 3 sessions there's a move under 23.69, that's a failure pattern. If it holds well, that's going to be a move that says you've gone above the left side highs. Now you're going to try to tackle, if you go higher, the big thing is the candle of the 21st of March, that horrible candle, opens at 24.36, makes it a higher, 2 cents higher, and then plummets 23.51. That's the candle that it will try to head to, meaning that 24.38 will be your upside target. And now what I showed my subscribers over the weekend, on Sunday night and then again yesterday, was the YM, which is the Dow futures, is acting really well. It's because it trades nearly 24 hours a day, except for the weekend. This is showing even greater strength than the Dow itself. And it is suggesting that there really will be a test, maybe in April, of the 21,117 all-time high, which corresponds to 21,169 in the Dow. So, and this is a gray leg B to the upside. So how we close today is going to be so important, because just you have 2 scenarios. One is a scenario that says, fantastic, it holds near the highs or it makes even higher highs. That gives you a nice cushion, because it says, okay, big deal. You pull back 150 points after going up 230 points. What's the big deal? But if it pulls back 100 points into the close from about 2, I say to subscribers, let's watch that period between 1:30 and 2:30. This is actually the earliest mid-afternoon for the market. That's really what we want to be seeing, because if there is a 100-point pullback that's going to be something that says, hey, tomorrow there could be unbelievable upside with the announcement maybe of taxes, or it could be just great skepticism that says, oh, you know what? It still has to be passed. There's nothing guaranteed. Let's just wait. And that could say that the high that we've seen so far today might be the high for a couple of days, at least for a big test to the upside. Got a couple more questions. We'll be right back. Basil Chapman, Tiger Technicians Hour, and the Dow's up to...
During the last century, there have been 34 bear markets, approximately one every 3.5 years. And since 1946, bear markets have accelerated to a rate of one every 5 years. When it comes to market corrections, the kind that take back 10% or more of your gains, they've been occurring at a rate of one a year during the last 100 years. Now, if you're in your 30s or 40s, you can probably weather the storm. It only took 13 years for the S&P 500 to get back above the highs that it made in 2000, which is much better than the NDX 100, which took 16 years to do the same. Look, it doesn't matter what age you are. There's nothing more important than protecting your nest egg. And on Wednesday, April 26th at 5:30, I'll share with you 2 simple patterns that have been present at the beginning of every bear market and how knowing these will save your retirement. We here at TFNN believe this knowledge is so vital that every member of our Tiger family will have a link on their members page for this 30-minute presentation. If you're not a member, come over to the homepage of TFNN.com and sign up now. TFNN.com, we've got your back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi everyone, Basil Chapman. Dow's up 231, S&P's up 13. Big divergence there. So we're looking at the 10-minute chart. Remember, look how important these peak Ds are. There's that peak D, pull back sideways, and bam, we're into the upside. A, B, C, D, and the final D was right there, the double top at 2,387. In the E-mini at 1010, 1020, the same thing, 238, 2,387.00, round number high. Pulls back. Now we're going to see. I can just tell you this. You break above, you're not you. The E-mini breaks above 2387, and that's going to be very positive. And they could say, going to rally into the close. But if we start to slide, be careful, because under 2381 to 2379 support, there's very little to hold up until you get to the 381 and the 2376 area. So I'll be watching this very closely. Now, the question I had was, one other question was, Judy wanted to know about, let me go right here, JetBlue, because what did she say? JetBlue, XAL airline, buy airlines, while the HO, the heating oil, is weak. HO a proxy for jet fuel, CL dragging down the whole energy complex by the airlines. You know, the XLE is very weak. So if I go to JetBlue, very nice candle. I have to do this A, B, C. This is a leg D, and I think it's a little overbought. And it says to me that I would rather be looking at JetBlue. It's at 21.89. I would be considering A, B, C, D. Oh, and it's got an A, B, C, D underneath the previous high. Well, I'm going to say, you know what? You might be right in the end, but I'm going to stick with this, and I'm going to say that the JetBlue right now is just a little bit toppy, 23.12, 23.15, correct? So it's a peak F in the weekly. Yes, be very careful. It's had a good move, not a great move, but a good move. It hasn't gone to a new recovery high. I don't like that. That just says to me that there's internal weakness here. You've got to be a little bit careful. Sorry, careful is different to shorting. I wouldn't be shorting, but I'd be careful. I'd wait for the 21 to 20.61 area. That's where I'd like to be looking at it. Just give me a call. Remind me about that. That's number one. Number two is let's look at another one. Yeah, AAL also leg D. It's a little bit better chart. Leg B in the weekly. It's a little bit better chart, and yeah, they're technically they're a little bit more. They're higher than I would like. I'd like to see a 4% or 3% pullback in either one, and then remind me to look at it again. The next question was the comp index. I hope I've got it all notated here. COMPX. Yep, very strong leg E/C to the upside today. In the daily, a leg, I have to call a leg F for now in the weekly, and a leg C continuing in the NASDAQ composite. This is a very broad, over 2,000 stock, broad composite, NASDAQ composite index. I'd like to look at LOVE, LUV, which of course is the airline that always gets praised because they seem to do a lot of things right. And it's gone to a G in the weekly, possible G. Daily is A, B. They're all in leg D and pulling back a little bit here. You know what? I'm just going to say to you, LOVE is probably one of the better looking stocks. But I don't like the fact that it's getting to a potential peak D way under the previous high. Remember, that's not. I like leg Ds to occur at. No, this is actually an E. I'd like them to occur at new recovery highs. In other words, above the previous high. It doesn't have to be an all-time high, but above the previous high. This is the high of the first, of 59.68. It's a 57.34. Folks, stay tuned. We've got great programming coming up. I'll remind you again about Steve's webinar, and check out my opening call. Hopefully it'll be beneficial to you. And we did get out of some of our positions, our short positions, most of them for just either tiny gain or a break-even trade. One was a little bit of a loss. What can I say? That's how it works. 6 weeks we were short. What can you say? We'll be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.